Chris, so you understand that the Prime Minister has written a personal letter to you, and this in a sense is an endorsement from the Prime Minister and his office, the fact that you've been a long-term India bull, and a call which is now just getting recognized and is now getting rewarded.
Yes, that's true, Nick. I'm very honoured to have received this letter. And yes, I definitely remain constructive on the Indian story. And I believe a lot of important reforms have been implemented during the term of the current government, current Prime Minister. And I think we are I'm hoping India is set up for an extended investment cycle similar to what we saw between 2002-3 to 2009. And so I continue to draw comfort from the evidence that the housing cycle picked up to a significant degree last year after a 7-year downturn. So I'm hoping, or I'm assuming, that recovery continues this year, even if we get some rate hikes by the RBI, which is likely. And I'm hoping, as are my colleagues in Jefferies Indian office, the residential property cycle will be followed with a lag by a broader capex cycle. And the government, by doing all this capex in infrastructure, is definitely creating an environment which should make the private sector more willing to invest.
Last time when we spoke to you about a direction on steel prices, you did indicate that steel prices will remain volatile, but the bias would be upwards. Now that was a conversation we had after your Q2 numbers. It's been a good 4 months after that. Has your view changed?
Not really, because if you look at coking coal price at $440, that's higher than steel prices of 3 years back, right? So if you have coking coal, which accounts for 40% of the cost of steel making at this price, and iron ore, which had come down to below 100 again at $140, $150, your input costs itself are significantly higher. Then on top of that, you look at energy costs like gas costs for those who are using gas. You look at all the refractories, rolls, all the consumables that we all used to buy cheap from China. All that is very expensive now. So all the input costs have gone up. And I think apart from India, nobody else is really adding steel capacities. In Europe, they're replacing steel capacities, and those replaced capacities will be more expensive simply because you're going to use hydrogen and gas instead of coal. So I think overall the cost structure in the steel industry is going to shift. Big exporters like China, who were, I dare say, exporting even when they were not making money, are no longer going to be exporting. And so as a consequence, the steel prices will stay at a higher level than we've seen in the last 10 years. It will be volatile, which is unfortunate, but it will be at a higher level than what we've seen in the last 10 years.
Let me draw a parallel. If I look at some of your peer banks are now aggressively adding to inorganic growth by acquiring a mutual fund business, by bidding for a credit card business of Citibank. We understand that some of your peers are very aggressive there. Are you tempted now to diversify? For the longest time, IndusInd Bank has maintained that, look, we want to be a pure play bank, very strong on fee-based income. We want to identify niche sectors where we can be a strong number one, and you've done that. Let's say your vehicle finance business or your diamond financing business. But is it time for you to now start really thinking on, let's say, acquiring a piece of insurance, acquiring a piece of credit card? Have you reached that level now?
So we reached that level, 3 years back. I think the issue is we've always communicated to the market that we are interested in parabanking. The concern is, when do we get the approvals and when do the guidelines become effective? So I think that's something which we are waiting. Having said that, I think that's not the only reason why we are not in parabanking. I think we are diversifying into other areas. I also told you that we're looking at a fourth domain. And the fourth domain can come out of affordable housing, wealth management, mortgage, or can even come out of a business like merchant acquiring. So I think we are looking at a fourth domain to create a business opportunity that can be organic or inorganic. So I think we are very clear on a fourth domain. We are also very clear that we want to be in parabanking in selected activities.